How is your fund different from other mainstream investments and other alternatives out there?
Explaining how our fund is different from competitors and other mainstream products is always a tricky one to do. Our high growth fund, I mean, it's something we're really proud of. For someone that invested 1 million rand in 2000 when the fund started, 18 years later they've now got 80 million rand from that one. So it's compounded about 80 times over that period, and I guess that's really what we want to deliver to investors. And I guess if it was only one or two things that you do differently, our track record wouldn't be as differentiated, and many people will have similar track records, which is clearly not the case. So our belief is that your alpha and your edge over time comes from doing lots of different things consistently right and consistently better than what the industry does. So I'll maybe just try to get into two or three of those. Obviously we can't run through everything, but maybe just two or three of the key differentiators to talk about. So firstly, it all starts with having the right people. Our view is you need to have the smartest people, because I guess it's inherently a competitive industry. You compete with other asset managers, so you need really smart people, but they also need to be driven and motivated, and they need to be passionate about investments. We want everyone on our team on their holidays, when they're lying on the beach, to actually want to read an investment book and stay on top of what's going on in markets. That's what we look for. So I think that's your starting point. You really need to have the staff that want to do it and love their jobs. Secondly, I think we want an inherent degree of skepticism when we analyze companies. So we spend a lot of time with management teams, and I think that's where our edge comes from. And most of the time you can take what they tell you at face value. But there are times when either they don't fully know what's going to happen in their businesses because they can't predict the future, and the economy and the political environment could throw a spanner in the works and affect their results. So you've got to be able to figure out when they're not on top of what's actually going to happen in their own businesses. And then you get the unfortunate rare cases where the management teams are just flat out misrepresenting what's going on or lying to you. And I guess those are the key ones that you've just got to have some sense for, and you've got to pick them out, because those are the ones where you could lose a lot of money, and that could lead to big capital losses if you don't identify those opportunities, or if you don't identify those management teams and avoid those. We also place particular focus on analyzing what we've done well and what mistakes we've made in the past. So every month, every quarter, we look back at what's worked and what's not worked. And I think one of the other things we try to stay focused on is realizing what we're good at and where our competitive advantage lies, and also realizing what we're not good at doing. So I think we're pretty open-minded to say we're not good at everything. We think we're pretty good at finding individual companies that's going to outperform the market over an extended period through good management, through taking market share, through outperforming the industry. And we're quite happy to admit that we're not good at calling the overall market. We're actually really bad at calling the rand-dollar exchange rates, and we can't predict the iron ore price or the oil price. So I think it's a differentiator versus competitors that we're pretty open-minded to say we're clearly not good at some things. Let's not place bets there. We think we are good at other things. Let's focus all our positions and our attention on getting those things right. Perhaps one last thing to mention is that we're quite willing to do a lot of work on complicated situations. So cases where all the information is not yet out there, or it's hard to find the info, or it's a company with a short track record, we're quite happy to dig in there, go see the company's operations, go meet the management team. And I guess that gives us an edge, where often we're willing to make a decision on the company either as a good idea or a bad idea before the market. A lot of especially the bigger asset managers, generally want to wait for all the information to be out there and for the investment case to be quite clear. Our view is by the time that happens, the share price already moved. In many cases, in shares we've owned, by the time everyone's figured it out, it's more than doubled. So I guess one of our edges is being willing to dig in there when it's still complicated, when there's still limited information, and make the call earlier than everyone else.